Hello, folks. This is Raj Sastri from Raj Option Trading. Today, I will talk about a silver stock. It's called First Majestic Silver, ticker symbol AG. So, obviously, it belongs to basic materials category and silver in specific. So, as you can see here, this is an image from First Majestic Silver. What they're basically saying is silver is more and more used in electric vehicles, and it's also used in multiple areas including circuit boards and various applications. So going forward, especially in the EV market, electric vehicle market, there will be more and more consumption of silver. And also, as you can see from the chart here, silver demand in the automotive world is going to increase as we go forward. So it's steadily increasing, as you can see here, from 2020 all the way going forward. This is one of the drivers for increased demand for silver. And according to the Globe Newswire, outlook for silver remains positive, and the annual price is projected to rise by 13%. And also going forward, silver demand is going to be forecasted to rise 11% in 2021. Overall, I feel with multiple tailwinds going on, there is a very good case to be made that demand for silver is going to go up in the future. As the demand for silver goes up, the mining companies like First Majestic, they can benefit because these folks are dependent on the price of the silver. The more silver they extract from the ground, and if the price is higher, they will make more money. So it's really a commodity play at the high level. It's a supply demand. As the commodity demand increases, these guys can make more money. So with that, let's dive into first Majestic Silver. And before we go into first Majestic Silver, let's go look at in general silver itself from an ETF perspective. Um, so first silver, let's go into first silver, profile itself. First Majestic Silver Corp, symbol AG. The stock price is around $15 and market cap is $3.42 billion. And the CEO here is Keith. He's got 83% approval rating, total fire rating. Not too many people rated at this point, but 83% approval rating, which is good enough. And this company engages in production, development, exploration, and acquisition of mineral properties. Basically, they extract the silver, from the ground. And these guys also own and operate in Mexico, which is one of the major areas where you can find silver, and other areas, Peru. So it looks like these guys own one of these mines 100% through the acquisition, which is a good story. They own the entire mine. And basically, they've got a lot of properties, as you can see here, 71,867 hectares of mining. So which is really good story here. These guys are one of the prominent miners of silver. And as you can see a stock chart, this stock chart has got ups and downs clearly. There is up here, down, up, down, severe down here, up. This is the COVID-19, I would think, and up, down. So, you don't need to rush to buy this stock because it always gives you opportunity, in these ups and downs for you to go buy it. And we got a steep up here, in January time frame, and stock sold off a little bit, making a small pullback here. So with that, revenue of this company is 363.88 million, and revenue growth is really nice, 21%, 21.40%. This is a quarter over quarter growth. They got good cash, and also they have some debt which is manageable at this point. They got good operating cash flow. The free cash flow at this point is negative. I think it's for this industry it may be okay. And about the CEO himself, Keith, he's got good background. He's worked in the investment business. He also worked on multiple publicly traded companies, and he held senior management roles. And he also, founded a company called First Quantum Minerals, so which is again in the minerals market. And then he founded First Majestic Silver. He's also a founder, which is a good story. I like to say a founder at the helm of the company. And he's got good experience. He also won a award back in 2011, which is a good story. So in a nutshell, he's got experience in the mining area, and he's got experience in the finance and legal regulatory area, which is a good thing. And from a news perspective, looks like folks are warming up to silver these days, as you can see here. And this company is also buying their own stock. They got this stock repurchase program. That's going to basically reduce the share count, so that thereby increase the share price. And they also acquiring a company here, or a mine in Nevada, which is good. So overall, I feel there is no negative news at this point. With the silver price going up, I think it could be a good tailwind for this company. So with that, let's go into a little more details. If you look at silver itself in general, we have got couple exchange traded funds. I will just quickly touch on some pattern here and trend and take it from there. So we got global X silver miners ETF, $39. And as you can see here from a trend perspective, weekly down, monthly down, quarterly down, half year down. This is one of the ETF here. Next one, you got silver prime juniors miners. Again, similar story here, weekly down, monthly down, quarterly down. And then you got famous SLV, it's the iShares Silver Trust, which holds a lot of silver. And this also has similar trajectory here, weekly down, monthly down, quarterly, a little bit down. And then we got SLVP, silver metals and miners, similar trend here, weekly, monthly, quarterly down. So as you can think from this, the moment silver itself as a commodity is down, witnessed by SLV, all the minor stocks, including AG, will follow similar trend. That's what's going on. We'll dive into that in a little more detail. And as you look at the SLV ETF performance, 2021 it's a 0.37%, barely budged much. 2020 46%. As you can see here, this SLV silver itself has got up and downs. 2015, 2013 through 15th, it kind of went down. 2018 went down, and it's got ups and downs, as you can see here. So many of these miners will basically mirror the silver price itself for the most part. They have they accelerate the movement here. If silver is up, they these miners will, good miners will go up too drastically. If it is down, miners may go down a little more. So it's basically relative to performance of silver itself. So with that, let's go into a little more details and look at First Majestic Silver and its key competitors in this area. So this chart, we have all the silver related companies here, and the way this is organized is we got performance, 1 year performance, as you can see. It's organized by descending order. The company at the top here, it's highly performing in last 1 year, and it's in the descending order from now then on. And if you look at the company AG, First Majestic Silver, it's right here. It's up 117% so far, in 1 year's time frame. And just like what we have seen in the silver itself, the major ETF, this stock is also down for 10 days, down for a month, and in a 3 months time it's up still. So basically it kind of follows the silver trend for most part. And this company itself, they got 1 year sales growth is negative at this point, -5. It's not too bad. And quarter over quarter, I think they did well, 36%, um, 30.80% higher. And they got institutional ownership of 34.20, which is not bad either. And short ratio, this is one thing got to notice here. They got a 8.4 short ratio. That means people are shorting this stock. So that's why any good news stock can go up, because some of the short sellers are betting, stock will go down. And otherwise, I mean, they got good amount of cash, some debt which is manageable. Nothing, too wrong about the company. I think numbers are good. I like this quarterly sales quarter over quarter sales growth here. And if you look at the competition here, I also like some of the other companies. Also, we got low price stock, Sierra Metals, good 1 year and quarter over quarter growth, and a good gross margin and also net margin. And same story with the Endeavor, good 1 year and quarter over quarter growth and good gross margin. And same story with the CDE here, and Wheaton Precious Metals and Silver Corp. So I think these are also these stocks will also work. But let's focus into First Majestic Silver, with 30% growth quarter over quarter and nice gross margin of 24%. A company is still not making money from a net margin perspective, but I think it's understandable. Companies investing into its own operations. So with that, let's go into a little more details here and look at the fundamentals of First Majestic Silver. Stock price is $15, and it's 20. I think it went down and up again. It's finally I think it went up, and it's 1.29% up, and market cap is 3.49. So with that, if you look at the market cap itself, since last couple of quarters, it was 2.56 back on December 31st, went down a little bit, 1.29, went a little bit higher, went a little higher, and now, a little more, and went up. So as you can see here, it's got bumps along the way. This is a drastic change from 2.56 billion to 1.29 billion. This could be attributed to COVID-19 scare. And then I think it gradually started making its way up, which is a good story. And from a revenue itself, the number itself, I think it kind of, same story. It was 83, 97, 96, went down a little bit, went drastically down. This is again COVID impact, then started making its way up. So it's, from a revenue itself, I think it's, up and down for most part, but now I think they got some groove back. It's significantly up in 1231, as you can see here, but still, sequential quarter it's down again. From a year-over-year revenue, I think they are nicely up here, because we are comparing 1231 to 1231 2019, so that's why it's 21% up. One thing to notice with these companies, really, they have been negatively surprising Wall Street with the, for most part, negative 1.79 million surprise, negative $11 million. One thing to notice, because Wall Street at times does not like these negative surprises. That's one of the reasons stock is down at this point, because they had their earnings back in February with this negative revenue surprise. And from a earnings per share perspective, they have been hit and miss. This time they have surprised positively by 1 penny, and they have negative surprise, a couple of times in the past. Gross margin is again, it's up, here, and it was down before. I think overall, probably this is something related to COVID, I would think. But generally, I think they're good on the gross margin side. Net margin, I think they are positive here in 930. So I think they were negative in the past. So it's company still trying to work out its net margin. They do have some debt, which is not bad. I think they're keeping the same level. It's not going up drastically, which is good. And from a price to sales perspective, it's not too expensive, 5.97, which is okay, not too bad. And shares outstanding, it's again manageable. It's a little bit more. And we also heard that they've got a stock repurchase program. So I'm sure the count will come down from a shares outstanding. It's in millions. And from an earning reaction, as you can see here, it went up a little bit after the earnings, went up 15% back in 930 earnings. And as you can see here, they got good positive surprises in earning reaction, and sometimes negative surprise also. So it really depends on their quarter. If they do well, I think they will give some positive surprise. And here, as you can see here, they did a little bit badly, missed both on revenue as well as EPS. So that's why stock came down here. So with that, let's go into the latest earnings call, and see what we can make out. So this is the eye chart. We'll not drain the slide. We'll just touch on a couple of highlights here. One thing which is obvious by looking at this transcript is the strong silver production and higher metal prices. If the metal price is high, if the silver price itself is high, and they do strong production, clearly they will do well. And also looks like they have some operating earnings due to higher silver and gold prices. It's again a commodity play. Commodity price raises, these guys make money. And also they have some net earnings, which is good. There is an increase here. And their cash costs, it's decreasing, which is good. And they are all sustaining costs. I think there's some increase here, not too bad here. So overall, I feel they have some things going on. They're still trying to work out some of the issues, but I think they do have, overall they see good secular tailwind. They also talk about their expectation. They think they expect silver price to go higher as supplies tighten due to increased demand, especially in greener energy and EV, electric vehicle solutions. So I feel if the commodity price itself goes up, and if these guys can produce more and more, then there's a good story for this company, because they can produce more. Metal price itself is high, and there's a good demand from electric vehicles, so they can make money. So with that, let's go into their earning itself, and how is the earnings reaction to the earnings from a stock price perspective. So Q4 earning, these guys have got their quarter, around the calendar year. The Q4 was in December. They came out with the earnings announcement in February. So February 18. So when they came out with the earnings announcement, stock went up 0.46% that week. And 2 weeks from then, 28th of February, the stock came down 11%. So I think, this is where, there are a lot of factors here. There is also some short sellers here. So it could be around the short sellers buying more, shorting more, I would think. So that's why stock came down here. Then we got here Q3 earnings announcement in November, and stock went up, and then it gave back. So as you can see here, if they get a bounce around the earnings, looks like they tend to give it back. That's what is happening here. And then in the Q2 earnings announced on August 7th, heading into the earnings, stock went up. As you can see here, 25% up. So stock gave back after the earning a little bit. So it's really, if the stock is strong going into earnings, it kind of gives back. Then we got one more earning, Q1 earning, May 14. Here also same story. Stock, a little bit down before the earnings, so it went up after the earnings. Nothing significant here. It's pretty normal here. But in this quarter here, Q4, back in February 19, they announced, stock went up before the earnings. It gave everything back after the earnings. So this is when expectations are high. Stock already made a higher move. Now they're giving back, some of those. Same story here. Stock went up and it gave back, during the earnings. So this is where I watch out and see how is the stock doing, heading into the earnings. Is it doing really well? If so, looks like this stock kind of gives back after the earnings. But if they're done poorly before earnings, like here, then they will go up a little bit. Now here again they went back. So there's a pattern here with the earnings. So that's something that we can watch out for. Next, we'll go into a little more performance on a yearly, monthly, weekly, daily basis. If you look at a yearly basis, clearly this company has got up years and down years. As you can see here, 2021 so far, just 3 months or so, 17% up. Last year, whole last year, it's 9% up. Year before, 108% up. So, some years it's doing really very nicely, and some years it's kind of giving all back. So it's got that boom and bust type mentality at times, but with the secular tailwind, with the green and electric vehicle, maybe things might shift to this company's favor. With that, let's go into monthly performance here. Looks like the February and March were bad on this company. Company has come down. Here 0.61%, 12% in March. So it's taking some beating. And if you can see why, looks like company have done extremely well October, November, December, January. 4 months in a good up months. So I think it's taking a breather here, which is understandable. And it also has got some short squeezers with around 8% short interest in the company. And you can see the pattern here. If stock really sells out, for example, here, a similar time frame like last year, stock came down like 3 months continuously, then it bounced back. So if it, same pattern, if it sells off, then it bounces. If it bounced hard, then it sells off. So you can watch out the pattern. That's why I feel this company is good to buy, during the pullbacks, and then wait for a couple months, it'll go up. So it's a good company, to buy back and buy on pullbacks. Now, if you look at weekly performance here, as you can see here, I think their earnings was sometimes in February, and nothing much happened around that time frame. It was, if I go back here, February 18th. So, February 18th, it's somewhere right here. It went up a little bit, then it came down after that. So nothing major, but it came down in March. And it did pull back earlier also, as you can see here, pulled back in 28th of February week, pulled back again here, 31st of January. So it's got the, pull back and go up type mentality, which is a good one to buy on pullbacks. If you look at the daily performance, last couple days, stock took beating, as you can see here. 3% down, 5% down, 2% down. Today it went up. So, you got to kind of watch out for this company and buy it on weakness. And, that's the way to play this stock. Next, let's, go into a little more detail to see if we can, if we can see some pattern in the way this stock trades. So this chart is organized. We got years on top, 2021, 2020, 2019, so on and so forth. And then we got yearly performance, yearly high, yearly low. As you can see here, this stock has got good range. 2021, like hardly 3 months, stock has bounced back from $11 all the way to 24. More than doubled from low to high. And similar trend, here 2020, same story, $5 low, $14 high. So the key for these type of stocks, which bounce a lot, is to catch them, during this pullback period and then buy it. And pattern continues for most part. So there's a good range between high and low, and it kind of gives good pullbacks at times. That's your buying opportunity. And if you look at 2021, it looks like February and March it's pulled back really hard. So I think as now it's trying to stabilize, as I can see, probably good to buy a little bit and keep and then wait for more pullbacks. And 2020, as you can see here, we had similar pattern. January was down, February down, March down. After 3 down months, it started picking up. And here, same story, 2 down months, then picked up. Um, 2020, as you can see here, January, February down, then it picked up. So it kind of pulls back in a like 2 month, 3 month type interval. 2 months down, 3 months down, 2 months down. So you got to watch out. Normally, it kind of goes a couple months down. 2017, it's down a lot. It's a down month, but at this point there is no EV, electric vehicle play. So I think it's a different market back then. So the key from this is really watch out for down pullbacks like the one we have now. You could even see if this lasts. Otherwise, I think it's good to buy some because it has dropped. Or if you want, you can even wait a little more because January it was up 34%. So you could wait a little bit because see here, October, November, December, Jan, we got 4 good months for this stock. It's only natural for this to cool off a little bit, then it will resume its upward trend. So with that, let's go into technical details here. This is Thinkorswim from TD Ameritrade and March 25th. So if as you can see the chart here, over the long haul, the company is doing good higher highs as you can see here. Um, and I think if you look at the earnings itself, like we talked about earlier, earnings and stock went up, earnings went down, earnings went up. So it's it has got its movements as you can see here. But overall, in the standard deviation tunnel, it's kind of making its way up slowly but surely. And right now it's just below 50-day moving average. It's trying to bounce off of 50-day moving average at this point. You can see here today we had a small candle, up candle here. So if it bounces off of 50-day moving average, then you can see it going up a little bit and take it from there. Relative strength index, it's 50 midpoint. At this point, I would think it might go up a little bit because it's as you can see here, as it reaches the midpoint, it tries to go up. So I think this time also it slowly try to make its way up. We'll see how it goes. Implied vol volatility is low at this point, understandable just after the earnings. There is a IV crush. From a DMI perspective, the blue line, as you can see here, is below the red line. That means at this moment, bears are in control. The bulls are not in control. So that's why the red line is above the green line or blue line. So that's why it's a little bit bearish at this point. So that's why you could buy it on a pullback and take it from there. And on balance volume itself, as you can see, it's a little bit flat right now. So that means money is not going aggressively into the stock. It went up, it went into the stock back here, but now it's kind of flat. And check-in money flow itself is telling me the smart money is going out of the stock right now. That's why the blue line here, check-in money flow blue line, is going down. It's understandable when a stock pulls back hard, typically this indicator shows down, but if it goes too much down like this, that's a contrary indication that it's good time to pick up some, buy some stock. As an example, if you see here, we got it pulled back really hard here, somewhere here, then it went up, so that's when stock started making its way up. Same story somewhere here when it's high. Even money indicator also went high, but when it pulled back, the check-in money indicator also came down. So whenever it's down, it's a contrarian type approach to buy and hold and then sell it on a bounce. So with that, let's go into a little more details. For that, we'll go into options and look at option statistics for this company. So AG, if you look at today's option statistics from Thinkorswim, total 10,703 call options purchased or traded, and we got 5,725 put options traded. So which means more people are trading calls than puts, which is a bullish indicator that tells us people are a little more bullish on the stock. That's why the put call ratio is 0.5. So which is a good indicator. That means people are not too much worried to buy the stock. They are actually buying the call, which is a good story. They think the stock is going to go up. So with that, let's go into a little more detail to see the option chain itself. So if you look at the option chain here, it's a March 25 AG First Majestic Silver. Current price is $15.74, and 52-week high is 24, and 52-week low is 5.87. So if you look at this chart here, the strike price right now $15 stock price, and if you look at 15 strike price right here, and we got 3,000 open interest at this point, which is good because most people are thinking, hey, you know what, it will go either 15 or above. So as you scan through this, we got 4,000 open interest, around 17. There are a lot of people betting that it will go to 17 by July 16th, and even more people are betting it will go to 20. That's why 6,300. And there are also a lot of people betting it will even go to say 25. There is a lot of call option open interest here, and so on and so forth. As you see, even if you go beyond, there are people who are betting it will go even to 30 and beyond. So overall, I feel there are people in the options market betting the stock will go high, and there are some people who are also buying deep in the money call options. As you can see here, these folks have bought deep in the money call option, which means they are willing to pay a little more and gain the benefit as the stock goes up. Similarly, on the put option side, there are folks who have interest in put options. There are some volumes here. 3,000 is the maximum I could see here at a strike price of $10. But volume itself is subdued compared to the call volume here. The put volume is less. I think in the previous slide we saw it's 50% less. So that's why people are betting this stock itself will go higher. So with that, we looked at fundamentals, we looked at technicals. Now let's look at what should we do now. So at the high level, 80% of silver is sourced from mining and 20% is sourced from recycling. That tells us most of this silver comes from mining, and this First Majestic Silver, ticker symbol AG, is one of the leaders in the silver mining with their lot of ownership around the mines in Mexico. And we also see there is these prices of silver is expected to go higher, and supplies are tightening because of increase in demand, mainly from EV, electric vehicle market, greener energy, and computer, battery, and whatnot. And industrial demand is projected to post a 4-year high in 2021. So basically, folks are expecting the growth of silver will go higher. So, with all these tailwinds, and also by looking at the technicals and fundamentals, we recommend to buy this stock on pullbacks. Right now, we have a pullback. It's okay to buy some, and then wait for more pullbacks and buy this stock on pullbacks. And I think that's a good way to buy this stock because it's got clearly ups and downs. And whenever it's down, it's good to catch this and then ride the long game. With that, thank you very much. Happy investing.